Hello, I'm Jeff Casson, CIO at True Potential Investments. As we look out in the next 12 months, we thought it useful to set out some thoughts for 2020. As we enter 2020, a number of the issues that had been worrying markets are dissipating, albeit they have not been completely resolved. Boris Johnson's decisive victory at the polls in December has settled the Brexit question. The precise details of the UK's withdrawal from the EU have yet to be finalised, and the legislation to block any extension of the transition period may increase the likelihood of leaving on WTO terms. In terms of the trade war between the US and China, which we have discussed in the past, the agreement of Phase 1 avoids a damaging imposition of tariffs on Chinese exports to America. The main points that the agreement addresses: an increased purchase of US goods by China, increasing market access for US companies within China, strengthening intellectual property rights protection, and stopping the forced transfer of technology. However, the agreement does not address the deep-seated issues which revolve around intellectual property rights and ultimately the jostling for economic supremacy. However, with both leaders keen to promote themselves to a domestic audience and avoid any escalation to a full-blown trade war, the deal is welcome news. The partial resolution of these issues has been a positive for markets, and the way we have seen a strong performance of markets into the year end. More importantly, they are supportive of markets as we enter into 2020. Turning to 2020, there are a number of points that merit attention and consideration. Monetary policy around the world continues to be accommodative. The US Federal Reserve has signalled, in the absence of runaway inflation, it is minded to leave interest rates at current levels until next year. In Europe, Christine Lagarde, recently appointed as president of the ECB, looks set to continue the dovish policy of her predecessor, Mario Draghi. And we can also think of the potential for fiscal stimulus from those countries that can afford it. Economic survey evidence is indicating that activity across the globe, particularly in relation to manufacturing activity, has started to bottom out and show signs of improvement, evidenced by the recent PMI data. Taken in conjunction with the global liquidity picture, this environment is supportive for markets. Crucially, labour markets have remained strong, with unemployment rates at record low levels in a number of countries. This is supportive of an environment in which financial markets can continue to perform. There are a number of events in the political calendar, notably the US election in November, that have the potential to introduce volatility. However, as 2019 has shown, be it the situation in Hong Kong, the trade wars, or in the UK with Brexit, it's important to distinguish between risk and noise. More fundamentally, it speaks to our core client proposition, the importance of diversification that allows our clients to do more with their money over the long term.